Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, May 8th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at, let's see, where am I going to begin here? I'm going to start with this image here. This says a lot. So if you go back a couple of weeks, we were in a sell signal mode that was expected to play out into the very low 100 area within 3 to 5 weeks. And then a series of, on a Wednesday, let's see, that was 2 weeks ago today. Yes. 2 weeks ago today, we had positive earnings, gapped us back into more of a neutral frame where we were then anticipating within a matter of a week or less this descending channel top at 172.49. And then it was a week ago, Monday, that we also gapped above this channel. Based on the announcement that the Chinese had approved auto driving capability in China for the Tesla automobile. So gapping back above this channel top and closing back above this channel top that today is at 172.49, a formation that we actually did test late last week and came off of very modestly. This level can absorb selling not only for the week itself, but even through the month of May. And above which, 3 to 5 weeks, that's beginning to look less likely now. We've seen a contraction in volatility to some extent. The market is lower priced than it was a week ago. And so, the question is, can we come off of 172.49 quickly? Or will we sort of get locked into a consolidated framework that may last for days on end? So 3 to 5 weeks could certainly stretch out to, say, by the end of June, where 225.96 is expected. So I am still expecting 225.96. By the end of June, I would say above 172.49. I think that's realistic. And over the next week or two, 203.64 is expected. And that is also a weekly resistance level that can contain weekly buying pressures. But the big picture, the base of support at 172.49, above which 225.96 remains, we'll just call it a 1 to 2 month target, that remains intact. And over the next week or two, 203.64 envisioned. So buying 172.49 is the recommended course. If you're a 1 to 2 week swing trader, you're anticipating 203.64 before taking profits. If you're more of a 3 to 5 week, 1 to 2 month position trader, you're expecting 225.96 before taking profits. Now on the way up, we've made some slight adjustments. We do have 184.76. Now this red line is 184.76 going all the way across, but really what 184.76 is, the high settlement price this week following last week's low. It also correlates well with the low of the high that was put out a week ago Monday and the high of the low that was put out on Thursday of last week. Yes, Thursday of last week. So we've rounded up to 184.76. It can contain intraday buying pressures. That is the high settlement price on Monday, and we've fallen since then. 184.76 can contain intraday buying, and below which 172.49 in reach. 173.86, by the way, is the same formation on the weekly chart that we find on the daily chart at 172.49. I'm going to say that if we close today above 184.76, we should, within a day or two, test 194.05, which is the high settlement price that was put out a week ago last Monday when we had that sort of a gap higher open on the China news. Let's put it that way. Overall, still expecting 203.64 as a 1 to 2 week target. And it would be really a settlement above 194.05 that should yield 203.64 within just a couple of days. But once again, I think you can bottom pick 172.49. 3 to 5 day swing traders may hold out for 194.05. 1 to 2 week swing traders may hold out for 203.64. And, once again, as I mentioned before, it is a 1 to 2 month target at 225.96. Now, if we close today day below 172.49. Let me go with the breaking of, because we have had high volatility days. If we break 172.49, there is the possibility of testing 166.70 on an intraday basis. This is a near-term channel bottom that can contain selling pressures for the balance of the day. So, day traders, if you buy 172.49, you obviously want to stop out below 172.49. And so where your stop loss is really predicated on your own risk management approach and all that. And that's something that I really don't get into in the scope of these videos. We do have recommendations, and we're going to actually be creating a risk management video here, or a series that we're going to be posting on our website in the coming weeks. So that is forthcoming. We do realize it is necessary, especially for newer traders, less experienced traders who just don't have the whole risk management, trade execution strategy down. Risk management is the crux to good trading. It is the core element for any ongoing, long-term, successful trader. It is the risk management strategy that defines that, as far as I'm concerned. Now, of course, technical analysis, fundamental analysis, any analysis, that is certainly part of the triad, if you will. And there's also trading psychology. And they all come together. If you can get them all down, they all come together into what really provides the possibility for longer-term profitability. But let's move away from that subject and get back to what if we close below 172.49. I then have a 3 to 5 day target in the upper 150s, low 160s, back to this previous double bottom at 160.51 and this sort of gap low at 157.51. I think this can snag selling pressures for a day or two or three, perhaps, following a settlement below 172.49. But if we do close below 172.49, I would expect a retest of this long-term trend line that is presently at 139.42 that we did test several weeks ago in the 138 handle. It would be our next 2 to 3 week objective if we close below 172.49. At this stage, I'm just playing it stair step. I'm not swinging for the fences. You might consider reaching for 226.31 as swinging for the fences, but I think that that's realistic. So long as we hold 172.49, I think this market can regroup. We've got some weakness now following that Monday high of last week. The question is, will we continue south into the upper 130s over the next 3 to 5 weeks or sooner? The answer for that, for me, is yes, if we close below 172.49. Until then, this market can bottom out at 172.49, round up to 203.64 within 2 weeks, to 225.96 by the end of June. And I'm going to leave it at that. I think I have pretty much said it all. Anything that needs to be repeated, you can rewind if you like. I'll be back, of course, tomorrow with Thursday's Tesla report, and you have a great day.